Hi and welcome to the Market Alert for Tuesday, the 1st of June 2021. So the main headline, which was buried over the weekend, is this: Biden reveals first budget, a 6 trillion, yeah, you heard that right, 6 trillion spending plan with 800 billion for climate change. So I thought I'd just throw that one in there. There is other news about inflation, but this Market Alert really is just to bring you up to speed with what's happened over the last couple of days. I mean, obviously Friday was quite quiet, and then of course Monday, bank holiday and Memorial Day in the US, which added to the implied volatility's benefit, because we've made a new low of 12.27. This goes back to pre-COVID levels as well. So the lower the implied volatility goes, the more of a correction you're going to get in the underlying market. Something else that's has been hidden from the news really is the reverse repo. This is sitting at a record high. Now what I'm going to do is not explain it. There is a brilliant video here from George Gammon, which I'll put the links to both of these, the chart and to this video. Absolutely brilliant. It's 26 minutes long, and you will need a cup of tea or a cup of coffee, but he explains it brilliantly and what is actually going on and why, as he says here, as a repo market warning signal of what's going on. You only have to just look at the Fed's chart here as well to see that this is a bit of an issue, to say the least. So if you're interested, then have a look at the video there. News while I'm here today, we've got a bit out today, and let's just have a quick look through. OPEC meeting today, that's a red one. ISM manufacturing, that's likely to have gone, it's the PMI, so that's likely to have gone up. And then Bailey speaking at 4 p.m. And then we've got an FOMC member, Brainard, speaking as well. Rest of the week, Wednesday is an Italian bank holiday, and we've got ADP on Wednesday, which means that we must have non-farm on Friday, which we do. And also, before I jump the gun, let's have a look. Tomorrow we've got Bailey out again, and also Powell will be speaking because it's a quarterly meeting on Friday as well. Actually, no reason, no, that's I'm getting confused here. That's the FOMC quarterly meeting. So Powell is actually speaking on Friday at midday. Along with the criminal Lagarde, she's out. Well, they're all out actually. We got a trio of criminals on Friday. So but jam-packed news for the rest of the week to follow on from the Monday close. So let's have a look at the Dow. And we'll start off with the daily chart. You can see yesterday the electronic market just coming back to the 34,486. Also Friday was fairly quiet. So there you can see a bit of selling pressure in the market, I think. Let me just check this. Let me just put on a cross-eye, then I will have the right place. Just having a look there. No. So Friday... Thursday we see the market go up. Friday, narrow range quiet, which you'd expect. That makes more sense. Down on Monday and then up overnight at the moment for the Dow there. Meanwhile, in the DAX, similar picture. I've just added a few more fibs in here because we've got this low, this high, and the market pulling back to 62% there during the electronic trading session yesterday, so now free to move back to the upside. I'm just going to delete a few of these lines, and that's fine. I'm just having a look at the fibs here just to see whether from there to there we've already drawn in here, which the market's making its way back through. But there is also here to here as well that we could use, but I think it's just a bit too close. I mean, feel free to do it. And you will get a confluence of fibs as well as the market starts to make its way back. In fact, I'll just draw them in for you so that you can see. So from here to here, this minor swing, like I say, it's only over 2 bars, but you will see there that we've got a selection there. The market already through the 38s and sitting at 50 at the moment. So there's a lot to get through in this area to get back to the all-time high of 15,605 there. In the 30-minute chart, let's just have a look, see what we've got. That was 31st of May. So that was yesterday. I'm just having to think through there where we are. Yeah, so back to Friday, that's right, 28th on Friday. The market coming down to the DP, making its way back up, leaving a new high. And then yesterday, the market just sideways and making its way down. Overnight, it's a bit of a shakeout. You see them buying back in here. And then moving the market back to the upside to yesterday. It's going to take a day just to get back into the groove because we've only got electronic prices here, no cash coming into the market to move them. So yeah, really stepping back and having a look. We're sitting at the DP at the moment. We've got the high of yesterday, which was an overnight high, and then the low here. So we really are sort of at the moment sitting at that DP area, and the market could go either way, but currently above the 200 MA, which was a resistance overnight, but they soon brought the market back twice, as we can see there, as it was retested. So it looks like the futures market are set to open to the upside there, and there's your targets. And the daily chart, of course, very important fib levels there. Precious metals are interesting as well, because on Friday they managed to move the market lower. So let's look at this in a bit more detail. Let's go inside and see what happened on Friday the 28th. They sent the market lower down to the previous day's low, which is Thursday's. And when I could see that this was starting to move lower, so what I decided to do was to get rid of the position I'd picked up earlier in the week when they slammed the price, because I was in a lot higher, came out at break even. And when they moved the market down to this level, I then bought back in. I could buy lower, and since then the market's continued to rise. I thought they were going to bring it down to 27, to be honest with you, on Friday, whilst they had the opportunity to do so. But it was too much of a stretch because you've got the S2 and the S3 to get down to that 27. And as soon as I saw the volume here and at, again, that 53 area, 27.50, and we tested as well, we came back, put in 89% at the low of the previous day, and then it was a matter of moving the market up, and that's how it's been since. They've been managing to move this to the upside, and it's probably got a lot to do with the fact that it's getting out that there's another 6 trillion. Keep printing the money. Inflation seems to be supporting the metals at the moment. That's the 30-minute chart. Let's have a look at the dollar, because that on Friday was a very interesting picture as well. I can just find the daily charts. Again, the 89.66. The market's finding support at the moment at this. Not only is it an 89.66 support, but it's also from this low to the 62% retracement that the market did its dead cat bounce, is also finding support at a fib level here. So let me just get rid of this. Let's move this and just reduce this down as well so we can see it, and then there we go. So we can see that the market's come back. The 89% is 89.66 level is also a 78% retracement there. We need to break this in order to move to the downside and then take out this support here. If we don't, then we could see the market holding at this level and trading sideways. So it needs to be taken out for silver in the daily chart to actually blast through and get through the resistance to the upside. Now we're through 62 there, but we've got a 28.32 that goes back to a support level over here. This is where we saw the last bout of selling, where the MDI turned red. before returning back to green. So we need to take this out, and then we've got a 78 and an 89 and another 78 here, which is at this high. So a lot to get through here and drive through. So it'll be interesting to see if it can do it, particularly with the, as I say, the dollar finding that support at the moment that we can see there in the 30-minute, coming back above yesterday's low. Let's have a look at the gold market, if I can find it, daily chart. This, interestingly enough, is already above the high of last week, which we can see there. Currently finding a bit of resistance, needs to take this out to continue to move to the upside. But certainly makes silver look cheap when you see how gold has traded up nicely there, and silver has been suppressed once more, stuck in a sideways move, when really it should be heading back to the February 2nd high of 29.49. That it should be through this and heading to $30. So again, it just goes to prove how much they putting the lid on this, but when it breaks, it will be magic as it goes through the 30 and then the 50, the all-time high, and then it will start to look like gold, where you've seen before it. This is the all-time high on gold. Silver nowhere near, so still seriously undervalued at the moment for the silver market. I don't think I can. Oh, I can. There we go. Yeah. So you can see that we've had that new all-time high through the 2011 high, where silver is nowhere near that yet. That's $50 for the equivalent of the silver market, which again I've shown many times. In fact, it's easier just to show on the monthly chart. I've got too many charts open here at the moment in the. There we go. In the silver market and the precious metals, but I like to see what's going on inside of the time frames, just see if I can add a few more positions. So there you go, you can see the 2011 high, and we're just nowhere near it yet. So that's a lot to come, but it's certainly a bullish picture there at the moment, getting that ascending triangle, which generally will break out to the upside. Okay, that will do it for this one. And say there's not it's just a quick roundup really of what's going on in the markets at the moment. Let's just have a quick look at the 2 minutes. We can see prices moving up even before the futures opens. That's not due to open yet for another 20 minutes. So already moving to the upside there for the German DAX, which will be being dragged along by the pajama traders on Wall Street. So there you go, you can see that round about the DP, so an equal distance to the low and to the high, which will need to be taken out. Okay, that will do it for this one. If there is anything else to report, I'll let you know, but as ever, thanks for watching. See you in the